interesting to talk to a value guy when we have a stock market that hits record after record, moving to all-time highs. So is it harder to find value stocks? Your fund has done well, but you would think, given what's happening with earnings growth in the economy, that some bigger cap names might be the way to go.
Yeah, it is interesting to be a value guy in a market after a 5 or 6 year bull market. That said, we do find several value ideas, particularly, as you said, in the large cap space. With corporate profit margins at historic levels, the question has become whether or not the earnings growth that we've seen is sustainable. And at Becker, we believe it is. So, as you said, we do find several value ideas in the large cap sector.
Well, you have kind of an interesting mix of assets. You've got a lot of financials and a lot of technology, and that intuitively doesn't make you think value stocks. So what's going on in those two sectors right now?
Right. So, well, let's start with technology first. I think you have to split technology into two segments, where you have the new school of fast growth and internet and social media, and then you have sort of the old tech that has more of the attributes that a value manager is looking for. Names like Microsoft, names like even Apple these days, where you've got large cash balances.
Apple's a value stock?
Yes, it is actually. You would 10 years ago you would not have believed me if I told you that, but
I
that
do not
stock,
believe you now.
that,
You've got to make a good argument for me.
That stock trades at 14 times earnings right now. If you exclude the cash and investment securities on the balance sheet, it trades at less than 13 times earnings. For a company with a franchise value as large as Apple's, I think you could make a compelling case, and we do, that it is a value stock.
You also own Microsoft, so you would think that some of Microsoft's issues are due to Apple. So what's the Microsoft story for you on the value side?
I would say that Microsoft's issues are driven entirely by Apple. The value case to be made for Microsoft is we are at the beginning of what we believe is a multi-year cost-cutting initiative put in place by the new CEO at the company. So while we've had some nice performance in the stock over the last several quarters, we think that there's much more room to go, especially as the company starts to run itself like a more mature value company.